I'm sure everybody has heard from Taimur about the impact of geopolitical tensions and the impact of interest rates on cryptocurrencies over the last year or so. And I think it still surprises quite many investors that we are seeing actually cryptocurrencies having a bit of rebound. So if you just look at the cryptocurrencies market capitalization for the two biggest cryptocurrencies, Bitcoin and Ethereum, we're seeing that both of them have crossed above the $1 trillion mark, right? So this is significant. $1 trillion is roughly equivalent to the market cap of the entire offshore Asian corporate bond space. So when you have 1 trillion number, that actually implies the market size is very significant. And if you look a bit deeper at what is driving capitalization, it's still very much the case that the two largest cryptocurrencies accounts for the vast majority of market cap. They account for roughly 80% of the top 10 of the market cap of the top 10 currencies in the crypto space. So a lot of attention will naturally be on Bitcoin and Ethereum, given that they are considered the core constituents of the market. One question will be, why have we seen such a huge, astounding recovery in cryptocurrencies? We know that at the start of 2022, when interest rates were first beginning to rise, and that created a lot of negative headwinds of cryptocurrencies. So what is the reason that despite rates still remaining at fairly high levels, that we're seeing this resurgence in cryptocurrency? So we'll go through some of the factors and hopefully that will explain a little bit about how market behavior is in cryptocurrency and in terms of what the outlook could be going forward for both Bitcoin and Ethereum. So just a quick recap, we're seeing Bitcoin prices bottoming up around the 15,000 level, and then now you have to recover back to around 45,000 US dollars. So the charts are shown on a log scale. Effectively, that means Bitcoin has tripled in just a year's time. The same price pattern can also be observed on Ethereum. So it's quite similar. We are seeing a big decline in cryptocurrencies at the start of 2022, but now there's make steady recoveries and rebounds back towards not quite the record highs, but at least they've reached the highest since early 22. And I think a large part of the reason why we're seeing strong recovery is quite simply we have a big recovery in risky asset sentiment. So one very interesting analysis that we've done is we look at the correlations of Bitcoin daily returns versus the S&P 500 daily returns. And then we are seeing actually the beta of the two of Bitcoin respect to US equities is close to 1, it's slightly above 1. So that means that around 3/4 of Bitcoin rally since October of last year, this could be attributed to a large extent to the rallying US equities. Given the very tight correlations these two assets have with a strong rebound in US equities, it shouldn't be too surprising to see Bitcoin actually doing well in such an environment. Given the fact that it is a high beta asset, we think effectively the argument has been settled. Bitcoin is a risky asset. It's not necessarily, or it doesn't behave close to a safe haven asset by the very fact that it has a huge positive correlation with US equities. So that has been an important factor for outperformance in Bitcoin. But a secondary factor, one that the market has been focused is also in terms of the correlation within the cryptocurrency space. So there has been some questions about Ethereum, partly because Ethereum, they move from a proof of work protocol to proof of stake. So fundamentally, it has changed in terms of protocol compared to Bitcoin. Bitcoin is still very much stuck on the proof of work protocol. Ethereum's proof of stake means that the energy economics of the Ethereum transaction has completely changed. How consumption of Ethereum network has fallen by close to 99% given this transition. So there has been a question of whether that will fundamentally change the relationship between Bitcoin and Ethereum, right? Given that the energy economics is so different now. But the good news is that we didn't actually notice a very significant difference. So we look at a period of returns prior to the merge, where the proof of stake protocol was introduced, and we compare the correlation to the period after the merge. And actually, the correlation of Bitcoin and Ethereum returns is very high. It's still roughly similar. It's still about 84 to 87%. So effectively, the pricing relationship of cryptocurrencies does not quite depend on energy economics. It suggests that there's a very strong and dominant underlying factor across both cryptocurrencies. It's a common price and driver of risk across the Bitcoin and Ether markets. So I think that's pretty much a strong reason for investors and regulators to be looking at Bitcoin and Ether equivalently. So they're driven by the same underlying market factor. They have somewhat different protocols, but effectively the transaction and use cases of these two cryptocurrencies are quite similar. That could be one of the reasons why correlations have remained very tight, even if the energy economics have changed. So I think that's one thing important to put out there. That market factor is a key driver of returns across cryptocurrency space. Another factor that we considered is whether the SEC's decision to approve a Bitcoin, spot Bitcoin ETFs, could that have also led to a bit of anticipation, a bit of a hype, whether there could be new inflows coming into the asset class. So I think the evidence, at least in the short term, is that it's not so clear cut. So the SEC approved 10 new spot Bitcoin ETFs. They also approved the conversion of a closed-end fund, the Grayscale Bitcoin Trust, into an open-ended ETF. And the net result is that even though the ETF gathered quite a bit of assets, 8 billion worth of inflows, but if you net out the outflows of coming through from the Grayscale Trust, the net aggregate inflows coming in because of this ETS decision is actually rather small. It's about 3 billion. It's not large compared to Bitcoin's market cap of over 800 billion. So it suggests that we have not really seen very substantial investment inflows in Bitcoin. It's not a key reason why Bitcoin has climbed so much. But I think it's important is at the same time not to miss the forest for the trees. The introduction of Bitcoin, spot Bitcoin ETFs, is a positive development for the Bitcoin market. And there are good reasons why we believe that it could have a more beneficial impact, or at least would not hurt Bitcoin.
Seem to have lost William for now. Sam, you can hear me, but you cannot hear William, correct?
Yeah. I seems we have lost Wei Liang on screen.
Okay. Maybe I will. William, you may want to. Maybe we can send William a message saying that he cannot be heard and he should reconnect. In the meantime, perhaps I will continue the discussion because this is the issue that is also very close to my heart with respect to the spot Bitcoin ETFs. We have this podcast at DBS called Copy Time, and Michael Sonnenschein, who's the founder and CEO of Bitcoin Grayscale Trust, he came to this podcast a few years ago, and you could tell in that discussion that he was, of course, like Michael Saylor of MicroStrategy, very strong believer in the future of cryptocurrencies, particularly Bitcoin, and the technology being itself a very attractive source of interest for investors, current and potential. But he also clearly at that point felt that as a trust, there were a whole bunch of rigidities around which it was getting in the way of broader retail holding. Institutional, he was not particularly worried. And in fact, those days, GBTC, the Grayscale Bitcoin Trust, used to enjoy a substantial premium over normal pricing of the Bitcoin. And so there was a lot of people who would buy the trust and then trade the premium as hedge funds. It reversed over the last couple of years when actually the funds started trading at substantial discount because the view was that it will never culminate into the trust becoming an ETF, and it would never lead to that hope for retail access that the basic premise of that premium was. Things have changed, right? I mean, the SEC, after having seen extremely reluctant for years, then turned into very constructive and very supportive of the environment. I still wonder whether, in terms of regulatory oversight and information availability, whether we have solved all the issues. But clearly, the ETFification of cryptos, especially with respect to Bitcoin, the approval is a big deal. Now, of course, in the very short term, there are issues related to buy the rumor, sell the news sort of thing, and then there's been some movement away from particularly the grayscale trust into normal ETFs, which have led to some degree of price volatility. But I think those are frictional issues. In the greater scheme of things, we've certainly made it easier for the world to hold ETFs, which of course has questions for digital exchanges and crypto wallets. If you can just hold it through a normal brokerage account with an ETF, what else is there to do? That sort of stuff. But we do think that the core premise of a peer-to-peer network, having a digital asset that can be transacted in a completely different way than the way typical financial assets are done, that remains, even if ETFification makes the asset class look far more conventional, if you will. I'd also like to point out to everybody listening into this call that we have a chat window here, WebEx chat window. Please feel free to post your comments and questions there, because as we sort of go through it, we will be happy to take your questions there as well. Sam,
thanks very much, Taimur.
Okay,
I'm back in the
you're back.
call.
Okay,
So sorry, there was a bit of connection issue.
no worries. Welcome
I'm
back.
So I'm just going to restart what I was talking about on the ETFs. So the first point that I want to make was the simplicity of investment through an ETF and improved ease of access could allow new capital to come in to the Bitcoin assets. The second point to make was the fact that the SEC regulations with regards to offering the best bid and ask prices to investors. So with regards to tempering or prohibit.
Okay, seems like we've lost William again. Sam, perhaps you can take over the slides and display it from your side, okay?
Yep.
And then we can get going with your section, and then when William is back into a more stable connection where he's not sharing the slides, perhaps we can go back to him. How about that?
Yeah, sure. Okay,
Yeah.
let me share the screen from my end first.
I'm not sure how exactly you get to override William. Hopefully that's not going to be an issue. Excellent.
Okay.
Got it.
Let me full screen it. All right. Okay. So as for my section, so I will talk about the impact of CBDC and stablecoins issuance and some sort of new regulation around the world on stablecoin issuance and moving forward. So first of all, Federal Reserve last month has issued another technical paper on the impact of introducing new interest-bearing assets into the system. So the basic theory or the assumption here is that whenever there is a new asset coming in, then there will be a shift in deposit behavior or deposit habit. So if you look at the chart on the right-hand side here, when there is, say for example, another USDT or USDC or other stablecoins coming in, then the deposit curve will shift to the left from the red line to the black line. So that means the deposit has been, the total amount of deposit has been going down. And then because the banks may want to keep up with their deposit level, they may have to raise the interest rate or deposit rate as well. So at the end of the day, when there is a new asset coming in, then we should see an increase in overall deposit rate. And also because there is a switching cost between traditional deposit, say for example, you put your deposit in US dollar or Sing dollar in commercial bank, and then now you want to put it into, say for example, a US dollar packed or Sing dollar packed stablecoin, then there is some sort of deviation cost or transaction cost involved. So that will also shift the supply curve to, or change the slope of the supply curve to be precise. Then in that sense, the supply curve is steepened. So whenever the bank want to, keep the deposit in, then they have to raise the interest rate even further given the steeper supply curve. So this will pose an impact on the overall interest rate or even the monetary system. So say for example, for the case of US, when there is an increase in interest rate because of stable coins, then perhaps the Federal Reserve have to come in and buy more asset through different monetary policy to stabilize the interest rate. And in that sense, that may even complicate the Fed balance sheet as well, because whenever you have to buy more asset, then balance sheet of the central bank has to be increased as well. So there is certainly some impacts on managing the monetary policy moving forward when there is CBDC or stablecoins issuance coming in. So from regulation perspective, because stablecoin is one of the very foundation of the cryptocurrency markets, because we have to trade whenever we want to cash in, cash out, or we want to lock the profit or cut loss when we are trading cryptocurrency, then we have to use the stablecoins. So, and also stablecoins have a lot of other implication or products like DeFi, loans or kind of things. Then that those products could be quite risky. So the HKMA and MAS, both central banks or de facto central bank of the two international financial city, they has issued their respective proposal. So Singapore MAS issued their proposal, I think, back in August last year, and in our last digital asset report, our colleagues has been discussing that already. And HKMA in December, they has also issued their proposed stablecoin legislation. So in this light, we try to compare the differences of these two monetary authorities on their stance and proposed legislation framework. So the foremost difference in the regulation is the scope of the regulation. So for Singapore only allows single currency packed currency like SGD and also other G10 currencies. And for Hong Kong will regulate both single currency packed stablecoins and also basket asset packed stablecoins. So this is the core difference of the two monetary authorities on stablecoins. And then, of course, both HKMA and AS ask for full backing reserve at all time. And but then there is a slight difference on the definition of the reserve assets. So whenever when we are talking about the reserve asset, usually the reserve asset has to be fairly liquid and high quality. So HKMA just simply state that it has to be high quality and liquid asset. But for MAS, they put it on paper that it has to be cash or cash equivalent, or central bank or institutional bonds with AA minus or above credit rating debt securities with no more than 3 months of residual maturity. So this is one of the difference between MAS and HKMA regulation as well. And both of them also share the stance that there is a need for segregation and safekeeping of asset with banks and custodian. But then there's another difference here, is the jurisdiction. So for Singapore, it's also regulated multi-jurisdiction issuers of stable coins, while Hong Kong, whenever we want to issue a stable coin in Hong Kong, then HKMA will require the company to set up a company in Hong Kong, with chief executives, senior management, and key personnel has to be stayed in Hong Kong under the oversight and regulation of HKMA. So this is another key difference here. And also there is a difference in capital requirement. So for Singapore, the base capital has to be 1 million Sing, or 50% of the annual operating expenses of the issuer. And for Hong Kong, the minimum paid-up capital is slightly higher, which is at 25 million Hong Kong dollar, around like 4.5 to 5 million Sing, so slightly higher than Singapore. So these are the core difference of HKMA and Singapore. Oh, and there is one more thing, is that whenever we are talking about the redemption, Singapore explicitly say that the redemption has to be done in 5 days, while Hong Kong, we said, has to be done in timely manner. But then there's an extra requirement here in Hong Kong, is that there is no redemption criteria or requirement for the coin holder. So for example, we cannot, the coin issuer cannot, set of rules that you cannot redeem the coins with under a certain amount. So we cannot set this kind of requirement when for the coin holder when they want to redeem the coins. So this is another difference between MAS and Singapore in view of some sort of recent lawsuits in Hong Kong. Okay, so and then on the CBDC side, so we have been talking about the stable coins. So now we move on to the official CBDC, the central bank digital currency of different central banks here. So for ECB, then they have also issued another rule book to discuss the future model of digital euro. So here they have identified the actors, the key actors here. So we have the consumer, have the merchants, we have the intermediaries, and also we have the euro system domain here. So we have 5 actors here. So the intermediaries moving forward, they will take on the role of asset management, liquidity management, and also transaction management. So for asset management, what we mean here is onboarding, offboarding, KYC kind of related activities, and this can be done in both physical or digital form, because this may this will enable the financial inclusion for those who are not very familiar with the digital system, like the elderly. So physical registration on onboarding and offboarding is needed here, and then the intermediaries will help with the funding or defunding. That means top up your digital wallet, and also whenever there is not sufficient fund, then the intermediaries can help with can help connecting the commercial bank to transfer the fund into your digital wallet. So this is what we call waterfall or reverse waterfall. And then also for transaction management, right now the ECB will allow NFC QR code, something that we have been using for quite a few years already. This kind of payment system for digital euro in the first phase. And then on other digital CBDC, then for HKMA, it has been working on trials with 16 private companies, or including banks or payment companies, on different trials. So for example, here we have the prepayment and subscription using the e-Hong Kong dollar. So this is what we call the escrow account for retail clients. So for example, when the Hong Kong consumer, they want to buy something or subscribe for some services, the smart contract will first lock the e-Hong Kong dollar, and then until everything is confirmed, they will release the e-Hong Kong dollar to the merchant wallet, and then the merchants can receive the e-Hong Kong dollar. So this kind of escrow account will be written onto the smart contract. So
Sam,
yep.
There was one question at the chat box that who will be to your earlier slide on the euro area, on the digital euro side, right? That who will be the approved digital euro intermediaries?
Oh, so these could be banks, and also some digital payment company as well. So moving forward, there will be more guidance on this front, but this will, of course, include financial intermediaries and also some sort of digital payment companies.
So it's not just banks.
Yeah. It shouldn't be just banks, because banks could provide the liquidity, but at the same time, it could be some, the intermediaries could be some wallet providers and other companies.
With all the reserve requirement and liquidity requirement and so on. Yeah, makes sense. Okay, go ahead. Go back to Hong Kong. Thanks.
Thank you. Yeah. So when we are talking about our escrow account, it's not just about retail, right? It's also about investment. So some of the financial companies in Hong Kong work with HKMA to develop a fund investment using the e-Hong Kong dollar. So for example, investor, they first prepay for a fund investment. They place the order, and then they have locked up the e-Hong Kong dollar, and then the fund manager has been informed with this prepayment, and then they will execute the order in the fund market. So this could provide some sort of credibility for both investor and the fund manager, because on one hand, the investor can guarantee that they can get the funds before they pay the fund manager, and also the fund managers, they can guarantee that the investor, they have paid them before they execute the orders. So both of them will be happy to execute this order with less risk. So in that sense, this is also an investment like escrow account, like what we have done in the retail sector. And the other future use case is the real estate tokenization. So in real estate tokenization, when we are talking about real estate contracts or mortgages, there are a number of transactions for for example, a secondary transaction, right? So maybe there are like 5 or 10 owners before myself on this particular mortgage or particular real estate. So all these details could be tokenized in the future. And also, when we are talking about tokenizing the real estate asset, then this would allow us to, some sort of like syndicated loans moving forward. So when we are talking about tokenizing a real estate, and then this tokenized asset can be transferred into some sort of real estate credit, and this credit can also be sliced up to different different lenders, different commercial banks. So this will also potentially be another use case for the Hong Kong dollar. So another thing that we want to discuss here is the ECNY from these PBOC. So from the PBOC, as we all know, they has been pushing for ECNY for a couple of years since 2019, and transaction has already reached renminbi 1 trillion or even more. So so here the next step of ECNY is to pushing forward to the international theater. So here here in the ECNY, we share the screen here, is that you can download the app for ECNY, and as foreigners, we can also top up or use the ECNY in China moving forward. Because the first trial, if we remember, it was the Winter Olympic back a few years ago, and now it's expanded to other daily use for foreigners in China. And then the next step would be the cross-border use of ECNY between Hong Kong and China, because as we all know, the biggest tourist group of Hong Kong is mainland Chinese tourists. And if we look at the charts on the right-hand side here, the mainland Chinese tourist number has returned to around like 70% of the pre-COVID level. So when there are more Chinese tourists coming in, then ECNY become a very important option for them to pay for services and goods in Hong Kong, in addition to other payment systems like Alipay and WeChat Pay. And for the other way, because as we all know, Hong Kong tourists has been hoarding for visiting China in the past year, given a very strong Hong Kong dollar. So if we look at the chart on the right-hand side below, then we can see that the Hong Kong tourist number to mainland China has almost returned to the pre-COVID level already. So ECNY also become an important payment system for Hong Kong tourists in China as well. So so that's why the next trial will be the cross-border transaction between Hong Kong and China on retail level. And then this slide is just to show that Hong Kong resident has been embracing digital payments. So Alipay, WeChat Pay, their number of users has already reached 5 million people in Hong Kong, 5-6 million people in Hong Kong. So this also shows that Hong Kong residents is embracing digital payment, and ECNY could be another fast-growing payment alternative for the digital payment in Hong Kong. And then for Singapore also worked with the PPOC on on signing an MOU, a memorandum on using ECNY in Singapore for Chinese tourists, and also when Singapore residents visit China, they can also start using ECNY moving forward. And what are the next target markets? Perhaps it is Thailand, because Thailand has the most number of China tourists after reopening. So Thailand probably will be the next market that PPOC may eye on for expanding the ECNY. So this is my last slide here, and then I will pass it on back to Wei Liang. He's back with us. So ECNY is not just about retail or tourism. This is also about cross-border transaction on institutional level, on wholesale level. So for example, if we look at the table on the left-hand side here, we have already seen some sort of gold, iron ore, and crude oil transaction using not just in CNY, in ECNY particular. So moving forward, this could be another growing use case in the future. And for the table on the right-hand side here, we have already seen some sort of potential use case or wider use of renminbi, even ECNY, because of the growing business tie between China and Middle East. For example, like Sinopec, PetroChina, and other oil companies has been working with Middle East on CNY transaction with oil or LNG, or like natural gases. And then moving forward, they may use ECNY to settle these deals as well. And in fact, we look at the recent news, Dubai has also sent not ECNY, but they sent their own digital currency, own CBDC to China under the mBridge system. So the mBridge system, so just a recap here, is the system between China, HKMA, and Thailand, and some Middle East country on wholesale interbank transfer. So potentially this will continue to expand and save some cost for institutional clients moving forward. So that's the end of my part. So maybe I will pass on to Wei Liang first, and then we can come back in for the Q&A section. Thank you.
Right. So before William gets going, Sam, just take your slides back to William's section, and I just want to take this question from Cheng Bung on: is there an active tokenized real estate market anywhere in the world? I hope I'm not wrong. I think the answer is no. I don't think there's anywhere in the world there is a hugely liquid, active market where there's a lot happening. There are lots of people on this call who probably know more about this than I do. My knowledge base says the answer is no. There's a few $100 million worth of tokenized real estate here and there, but a particular jurisdiction that is more active than others, I don't know. If anybody has any view, feel free to post it on the chat. And until then, just back to, I was hoping William, given its bandwidth issue, would not share his slides. Okay, fine. Hopefully, fingers crossed, it'll be okay. Go ahead, William.
Right. Deep apologies for the interruption earlier. So I switched to a different LAN cable. Hopefully, this LAN cable is going to be perfectly fine. So we were discussing about the SEC approvals, and as I've mentioned, the net new inflows going to the ETFs, they're not particularly big, less than 3 billion. But what's important is that the ETF will facilitate development of the Bitcoin market. The first point to make is it will dramatically reduce the ease reduce the hurdles to access for investors across not just the professional investor base, but also for retail investors, because most investors do have access to US equity trading. Having Bitcoin ETFs definitely reduce and make it more simple for them to invest in this asset class. The second reason is with regards to the fact that having the SEC regulated ETFs brings about certain benefits. The first benefit is that under current regulations, the SEC has pretty stringent oversight, and that prevents a lot of fraudulent behavior, market manipulation behavior that could potentially be an issue in across to the different decentralized exchanges that trade Bitcoin. So now with a common market where brokers must offer the best bid and offer prices for ETFs, that dramatically changes the price discovery mechanism. It could potentially increase liquidity in the market. So all that means is that investors' risk premium for Bitcoin would be lower now compared to the past. So that's naturally a second benefit in terms of support for prices. And lastly, I would just mention that ETF transactions have very low costs, primarily due to the fact that that exchanges, they are very developed market infrastructure. They don't require particularly high level transaction fees, unlike on-chain transactions for the Bitcoin on the blockchain. It doesn't have very long time lags in certain cases as well for blockchain technologies. So all this immediately implies that cost efficiency for investors looking to invest in the Bitcoin markets is dramatically enhanced. On a net basis, this is a positive for investors. It's a positive in terms of reducing costs associated with trading these markets. But of course, there's always an argument that with the introduction of ETFs, it could result in more volatility, more financial market volatility. So, for instance, there have been academic studies at the financialization of commodities in the past. Academic economists were testing how commodity markets change when commodity ETFs were introduced starting from year 2004. And the realization was that commodity markets across agricultural markets, metals markets, fuels markets have become a lot more correlated since 2004. And this is largely attributable to the fact that commodity markets have become more financialized due to introduction of ETFs. But I would argue that this is probably not a major factor for cryptocurrencies, simply because they are already very financialized. The amount of trading activity in cryptocurrencies and the amount of speculation is already a lot more larger volumes compared to the actual real transactions that drives the price formation process. So as you can see, the correlation of Bitcoin and Ethereum to the global market risk factor has increased over the years. It's particularly high. So that shows that the net introduction of ETFs is likely to create an even more financialization for cryptocurrency. So we think that impact on volatility is not likely to be too large from that perspective. And the follow-up question is that with the SEC approval for spot Bitcoin ETFs, what does that imply for approvals in future for spot Ether ETFs? And there are several very good reasons why the SEC could follow through in terms of approvals for Ethereum ETFs as well after approving Bitcoin. Because the first reason is that Ethereum and Bitcoin, they're very similar in design, and given the very close correlation in prices, as I've explained earlier, it seems that the Ether is considered a very close substitute from an investor point of view compared to Bitcoin. So from that point of view, that's one argument in favor of approving Ethereum. And more importantly, Ether is also left off the SEC list of tokens deemed as securities. As you can see in the table below, there are over 60 tokens that has been classified as securities by the SEC. And it's very notable that Ether has enjoys the same benefit as Bitcoin in being excluded from this list. So that means that the regulatory oversight for Ether is likely to be very similar, very close to that currently for Bitcoin. The third point, I think, is probably the most crucial point, which is that Ether is already traded in the CME futures market. and that's the same as Bitcoin. So one of the arguments for a court order against against SEC denying of spot Bitcoin ETF was that it was a bit arbitrary because the SEC already have agreements with regards to surveillance and safeguards with regards to Bitcoin futures trading. And if they approve Bitcoin futures trading, then there's no reason why spot Bitcoin ETF should be different, given the very close correlations between the two instruments. I think that same argument, when extended to Ether, will probably still valid. So this is yet another factor why the SEC could consider approving a spot Ether ETF. And the final point is that Ether is also a highly decentralized cryptocurrency. There's no major actor that has a very strong stranglehold on Ethereum. Ethereum network has a very long operational history. It first came online in 2015. So very serious bugs will have been exposed by now. So from that point of view, Ethereum network is a very credible alternative to Bitcoin. Probably we could see the SEC giving approval in May, when the decision is due for many of the pending Ether ETF applications that have already been launched. And from a short-term perspective, as I mentioned, inflows probably not going to be very significant because of the approvals. But what's important is that it will be positive for longer-term market development. It will be positive in terms of reducing risk premium for Ethereum, and probably that will be supportive of prices over the longer term. Moving on to the next slide, we'll discuss yet another factor that has probably contributed to the recent strengthening of Bitcoin, which is that there could be a halving event that will be happening this year in April. So what is halving? So baked in the Bitcoin protocol is the fact that as more and more Bitcoins are mined, it becomes incrementally harder and harder to mine those Bitcoins. So the reward for successfully mining a block will eventually fall, or fall by half in this case. And this halving event happens roughly once every 4 years. If you look at the previous halving events, right, we've seen halving events in 2012, 2016, and 2020. What happens is that after the halving event, we have seen very strong rallies in Bitcoins, not always immediately after the halving event, but usually about 180 days afterwards. We could see very substantive gains coming through. So if you just look at 2016 and 2020 episode, we could see Bitcoin actually rallying 400% in the year just after the halving date. So the question is why is this the case? What's driving this price behavior? So if you think about it from the point of view of a miner, if they know that successfully mining a block will give less reward, so the reward is going to fall by half to compared to what they were given in the past. So the natural conclusion of miners is that maybe they would dedicate less resources to Bitcoin mining. They could change or rotate the resources away to other cryptocurrency networks. So in order to maintain the same flow of transactions, it must be the case that prices need to rise to offset the reduced Bitcoin reward that miners will get, so that they will still be committed to providing that transaction processing capacity, the compute capacity for Bitcoin. So I think that's probably the main reason why prices tend to rise to offset the lower reward that miners get whenever halving happens. So from that perspective, we think probably prices could still see a little bit of uplift after the expected halving, the next halving period in April. And so with that, I will pass the floor back to Taimur and address any questions that we have from the audience as well.
Thank you very much, Liang. So we have about 6 minutes left in this webinar. So again, I encourage webinar participants to post their questions at the chat window at the bottom right corner. And before anybody writes anything down there, Liang, a couple of questions for you, and then also one for Sam. Maybe I start with Sam. Sam, you were mentioning that there are all these network-related, or rather stablecoin-related developments that are now allowing sort of, a compare contrast between, say, Hong Kong and Singapore jurisdictions as to which jurisdiction is sort of more onerous from a regulatory perspective and which jurisdiction has more avenues for the sort of tokenization. So what's your sense if we were to do like a horse race between the stablecoin regime that has been outlined by MAS versus the one that has been applied by HKMA, which seems to you, more friendly, if you will, for near-term developments?
Well, I think for both HKMA and MAS, they share a lot of similarities in the proposed legislation framework. But I think for a issuer, what we have to think is that what kind of stablecoins you are going to issue? Are you going to issue a single currency packed stablecoins, or you are going to issue multi asset backed stablecoins? So this is totally different story, because only Hong Kong allows you to work on, like, for example, if you want to pack your stablecoin to multi-currency like US dollar, CNY, Sing, or Sing dollar, Hong Kong dollar in a basket, then you have to choose Hong Kong. But if you only want to work on a single currency packed stablecoins, then you can simply just go for Singapore with more clearer guidance on, like, what is the reserve assets or redemption period kind of things. So I think this is the core difference here. And also the cross jurisdiction criteria is another concern, whether if you are a multinational or multi-jurisdiction issuers, then probably Singapore has more a clearer regulation here. But for Hong Kong, you really have to start an office in Hong Kong if you want to issue a stablecoin in Hong Kong.
Right.
So that's the core difference.
Great, excellent. Sam, go to the chat box. There's a question from Jean. While you read it, I'm going to ask Wei Liang a question, and I'll come back to you. Wei Liang, you had mentioned earlier in the presentation that whenever we have a risk-on situation in the market and the S&P 500 is rallying, we tend to see cryptos, particularly Bitcoin, but also Ethereum, also rally. If we were to see the US stock market right now, of course, there's a lot of momentum, but also there is a lot of froth, if you will. Valuations are sky high. So if we are going to have some degree of equity market correction this year, and by that I really mean the US, I'm not talking about China or elsewhere, just the US, would you then turn kind of bearish on crypto?
Right. So I think the given a historical relationship that if the US equity markets is to see a significant fall, we could also see Bitcoin underperforming in this environment due to a bit of a portfolio rebalancing effect, if you will, a little bit of arbitrage effect, if you will. There should technically be investors selling down their Bitcoin holdings and buying more S&P just because of relative prices. And also, if you look at the in the early days of the pandemic, actually, when global stock markets came in this under significant downward pressure, so we have also seen Bitcoin and other cryptocurrencies underperforming. And
So Wei Liang, you and I have been doing this for several years. We have run all these cross-asset correlation to see the relationship between commodities and cryptos and stocks and cryptos and bonds and cryptos. I think you and I have come to the conclusion that this is not exactly what would people like to call as a digital gold. It's exactly the opposite of that. That when things are good, people want to take the long position. It's not when things are bad.
Exactly. The only other market event which could potentially argue somewhat against that was during the U.S. Regional banking stresses in 2023, when we see a little bit of a uptick in Bitcoin prices, despite the fact that U.S. Banking stocks were under pressure. So I think that was a very special case where it seems that the financial system could potentially be enduring certain stresses, and that's
Right.
encouraging some buying in Bitcoin. But by and large, the longer term picture, if you look at the relationships between Bitcoin prices and the market risk factor, it has been the case that they are positive, and we could expect a very close relationship between the two.
Right. So, Wei Liang, go look at Ian's question on the chat side. You will have about 60 seconds to answer that. But before that, I'm going to go back to Sam. Sam, any response to the earlier question?
Yep.
And again, you have 60 seconds also.
Yep, of course. Okay, so for ECNY, I think well, for that could be a wider usage moving forward, because after all, WeChat Pay or Alipay or other wallets, they are private wallets. So they're comparing to ECNY is more like, more like a risk-free, because it's from the CBDC, and also you can use it for offline payment. So it's slightly different from WeChat Pay and Alipay. So I still see a wider usage moving forward for ECNY on retail level. And for institutional level, of course, this ECNY is part of the agenda of renminbi internationalization, because for all those oil or commodity tradings moving forward. That's why we see the Ambridge initiative between all these central banks has been moving quite fast in the past few years. So I think that yes, there are wider usage in both retail and the institutional sphere.
So my 2 cents on this is, if the Chinese authorities want it at the retail level, there will be some action. It will not go die away. But I think as a completely organic basis, I think the question is a correct one. There is a lot of outlet for Chinese consumers to spend their money through the digital channel. It doesn't have to be through ECNY. But I think the authorities, particularly from a benefit disbursement perspective, want to use this channel. So I think it remains alive and will probably be kicking as well going forward. All right, Wei Liang, back to you. 60 seconds or less.
Right.
Lots
So
of 3 questions.
3 questions. So why does the bull run, or rather, why is the halving not priced in, even though the supply shock is well known in advance? Okay, so I think the simple reason is really boils to mining economics, right? So the granting the Bitcoin reward for mining is still high, as it's not shrunk. So what that means is the prices is effectively a signal for miners to deploy more resources. So prices will rise too far in advance of the halving event. Then that means that there will actually be more miners trying to compete in the mining market, and that creates, I think, excess capacity that reduces the price. So I think it technically shouldn't be the case that the prices will front run the halving event simply because of the fact that the adjustment in the mining supply is not warranted. So what is the view on the 2024 halving? So as I've mentioned, given the fact that the rewards for successfully mining a Bitcoin is going to fall by half, if the miners are to be incentivized in maintaining the same amount of compute resources dedicated to Bitcoin, it must be the case that prices need to go up from here to compensate them for their time, right? So it's not going to be easier solving that puzzle and successfully mining that block. So definitely the case, I think, is that
Okay, Wei Liang, we're gonna stop right there because we're over time. Again, thank you very much for everybody for dialing in today. This issue is close to our heart as well, so we'll keep digging into it, and we'll come back to you in 3 months' time with one more update. And again, Wei Liang, Sam, thank you so much. Sorry, Diva, didn't really get to use your expertise, but thanks for staying with us. And everybody, have a great day. Stay safe, stay healthy. Bye bye.
Thank you.
Thank you.
Bye-bye.
Thank you.